Remember that the following content is just a summary of information available on the Internet, generated by AI. Investing decisions carry risks. Analysis of iShares 20-plus Year Treasury Bond ETF TLT impact of macroeconomic indicators and economic policy. The iShares 20-plus Year Treasury Bond ETF is currently priced at $89.61, reflecting a 1.21% increase in recent trading. The daily price range fluctuated between $88.82 and $89.9. The fund's market capitalization stands at $53.68 billion, and it offers a dividend yield of 4.19%, making it a moderately attractive choice for investors seeking stable passive income. Impact of the Efficiency Department's DOGE budget cuts, $7.2 billion savings. The Efficiency Department has reported savings of $7.2 billion, which implies reduced borrowing needs for the government. This could lead to lower Treasury issuance, increasing the value of existing bonds and benefiting TLT. However, budget cuts often translate to reduced government spending, which could negatively affect employment. If job reductions occur in the public sector or if government programs are scaled back, unemployment may rise, leading to lower consumer spending and a potential economic slowdown. If budget cuts indeed result in rising unemployment and weaker economic activity, the Federal Reserve may be forced to cut interest rates earlier than anticipated. Such rate cuts would reduce bond yields and increase the value of TLT. Impact of inflation, interest rates, and Fed policy. The Federal Reserve has maintained high interest rates, but market speculation suggests that the first rate cuts may come in the second half of 2022. Declining inflation could allow the Fed to adopt a more accommodative stance. If interest rates decrease, long-term bond yields would fall, positively impacting TLT. Conversely, if inflation accelerates again, the Fed might maintain high rates, leading to further increases in bond yields and negatively affecting bond-focused ETFs like TLT. U.S. Treasury yields and their effect on TLT. The current yield on 10-year U.S. Treasuries remains between 4.5% and 5%. A drop in yields would be favorable for TLT, as lower yields typically translate to higher bond prices. Historically, TLT has performed well when yields declined, such as during the 2020 market turbulence. Strength of the U.S. dollar and its impact on TLT. The U.S. dollar remains strong, but anticipated Fed rate cuts could weaken it. A weaker dollar makes U.S. Treasuries more attractive to foreign investors, potentially driving up demand for bonds and boosting TLT's value. Geopolitical uncertainty and investor sentiment. Uncertainty surrounding the U.S. presidential election, tensions in the Middle East, and economic instability in China could push investors towards safe haven assets like U.S. Treasuries. Historically, bond prices have risen during times of geopolitical instability, benefiting TLT. Commodity prices, CRB index, and inflation risk. An increase in commodity prices could drive inflation higher, leading to prolonged high interest rates and negatively impacting TLT. Conversely, a decline in commodity prices would reduce inflationary pressures, making it easier for the Fed to lower rates, which would be bullish for TLT. Historical U.S. Treasury yields and their impact on TLT. 2010 to 2012. Yields on 10-year Treasuries fell from around 3.5% to 1.5%, driving TLT higher. 2013 taper tantrum. Yields surged to 3%, causing a sharp decline in TLT. 2014 to 2016. Yields declined again, pushing TLT higher. 2017 to 2018. Fed rate hikes increased yields to 3.2%, hurting TLT. 2019 to 2020. The pandemic drove yields below 1%, resulting in a strong rally for TLT. 2021 to 2023. Rising inflation and Fed rate hikes pushed yields to 4.9%, leading to a sharp decline in TLT. 2024 to 2025. Yields remain elevated, but potential rate cuts later in the year could support TLT. Conclusion. Does TLT have growth potential? Several factors suggest that TLT may have room for growth, especially if the Fed proceeds with rate cuts, Budget cuts from the Efficiency Department negatively impact employment, prompting Fed intervention. Geopolitical uncertainty and economic instability drive demand for U.S. Treasuries. The U.S. dollar weakens, increasing demand for Treasuries from foreign investors. However, risks to TLT remain, including prolonged high interest rates if inflation remains elevated, stronger than expected economic performance, which could delay Fed rate cuts, a stronger dollar, reducing demand for U.S. bonds. Overall, the balance of factors appears slightly bullish for TLT, suggesting potential gains in the second half of 2025. We invite you to subscribe to our channel for easier access to future analyses. Please like the video to help us understand your needs better. If you want us to prepare a similar short report on another company, write its name in the comments. We do not engage in brokerage activities consisting of investment advice, portfolio management including one or more financial instruments, or preparing recommendations regarding transactions in financial instruments, or any other brokerage activities specified in the Act on Trading in Financial Instruments. Journal of Laws, 2005, number 183, item 1538. In accordance with Regulation EU, number 596/2014 of the European Parliament and of the Council of April 16, 2014 on market abuse, and the Commission Delegated Regulation, EU, 2016/958 of March 9, 2016 supplementing Regulation EU, number 596/2014 of the European Parliament and of the Council with regard to regulatory technical standards for the technical means for objective presentation of investment recommendations or other information recommending or suggesting an investment strategy and disclosure of particular interests or indications of conflicts of interest. The information provided in this recording is a compilation developed based on data and content collected from various Internet sources, which are not always fully verified by us. They are for educational purposes and as part of an experiment on AI capabilities. When making investment decisions, the user should rely on their own judgment. Transactions conducted by the user are considered their own independent decisions.